Welcome. Thank you so much for being here on Startup Grind community. Really happy that EQT Ventures could join us. So, Lars,
thank you for inviting me. Great to be here.
Brilliant, brilliant. Let's start a little bit with you. Tell us a little bit about yourself. Like before EQT Ventures, how did you come in startup world or the professional journey?
Sure. Yeah. A brief background. I'm from Stockholm. I'm from Sollentuna, outside of Stockholm, born and raised. But then I moved to the US to study at universities. I spent 4 years at university in the US. Actually, before that, I went to IT Gymnasiet, which is like one of the tech high schools, to learn how to code a bit and had my first own startup, consulting type of business. And then I went to study economics in the US. And I spent a couple more years after that to make some money doing strategy consulting in the US to pay off at least parts of my student debt. And then I moved back after 7 years in the US in 2008. And I did a startup called Bidster for a year, where I was head of product or business development. Bidster was an online reverse auction website, which is pretty interesting times. But we were timing, I think, the fundraise for like Q4 of 2008, and that was the financial crisis. So that didn't end up happening. So Bidster went out of business around Christmas time, 2008. And then I joined King, the gaming company, early 2009, where I spent then 6.5 years. And after King, I went on to start EQT Ventures together with Hjalmar Winblad and EQT and a couple other people. That's the brief background.
Brilliant. How would you compare? But I don't know, times have changed a lot in the last 10, 12 years. But US at that time, Sweden today, are there any parallel differences? How was the startup scene there at that time?
I think in the US, I wasn't actually in the startup scene so much. I did Fortune 500 management consulting. I learned how to do PowerPoints and Excel, which turned out to be a good toolbox for later on. But I was more on that side. But I was missing the startup tech scene a bit since I had done some of that in high school. That's partly why I moved back to Stockholm to do something smaller and not work in a large consultancy. That's why I did the Bidster there for a year. But I think the US obviously has been ahead of Europe in many ways, but maybe now in recent years, the playing field has been leveling out a little bit in terms of the number of successful companies, the number of VCs in the market as well. So I think you can safely say that it's never been a better time to start a tech company in the US or in Europe. So overall, I would say, the tech community and entrepreneurship has never had a better time than 2021, the year we're in right now. So great news for everyone involved.
Brilliant. So community, if you're thinking about starting a venture, now is the time, and we're hearing it. Tell us a little bit about your time at King. Like, what were you involved in? What kind of projects you were looking at that time?
Sure. So I joined early 2009. At that point, King was maybe 40, 45 people. There was an online skill games website. And the main go-to-market was through partnership, through portals like MSN or Yahoo or RTL. And I think, sitting here in 2021, it's crazy that those were dominant in the internet in the 2000s, right? The top 10 websites in terms of traffic were all these sort of portals with a combination of news, games, entertainment. But then something happened there in 2009, 2010. Facebook came in, and we internally made this list. We called it the screwed by Facebook list. So we list which websites are losing traffic to Facebook and which Facebook or which websites are heading towards going out of business. And we looked at that list. 8 out of the top 10 were our partners. So we knew something bad was coming for King. So times were not always great. And like in most startups, you have these ups and downs on the journey. So I was tasked my first year. I played about 10,000 games, 10,000 Flash games.
Played like my job. You actually played. Okay.
Yeah, on the computer using a mouse and keyboard. I played 10,000 Flash games, and then we licensed about 200 of them and put King branding on and distributed them out to free games websites like Miniclip, Newgrounds, Congregate, these free games communities. And then we had tracking in those games. So we started collecting data on what mainstream gamers liked, what they liked and didn't like, what made them stick to games and what made them churn out. And then partly based on that, we then started making Facebook games. So I was a product manager for the first Facebook games that we made. We made a portal called FunFlow, and then a couple of match-3 games, one called Minor Speed, which was sort of like a Bejeweled Blitz around that time. And then eventually that culminated into the first Saga games, which I was the producer of Bubble Witch Saga, which was one of the first big hit games. And then that, after 2 or 3 weeks into the launch of Bubble Witch Saga, it was making more money than the rest of the King company.
Okay.
So that kind of showed the explosiveness of finding a platform on the rise and a platform with massive reach. I think already at this point, Facebook had 500 million users, and the platforms we were working with were losing traffic on a daily basis. So then, based on that, we continued making Facebook games, and then the next frontier, iPhone 4 came out around 2010, I believe it was 2011, and we started making the first Facebook games. We brought in this small studio called Fabrication Games in Stockholm, which was founded by Tommy Palm and Alexander Ekvall. So they joined the King team, and together we built up the mobile games team. And then we launched first Bubble Witch and then Candy Crush Saga in the fall of 2012.
Excellent. Before we go into Candy Crush Saga, I'll just rewind a little bit because there was a massive load of insight coming in your 3-4 minutes. But going back to the audience, I love what you said, screwed by Facebook. I think whenever there is a disruption happening, people or entrepreneurs go ahead and make a screwed by XYZ list. I think it's a great way of looking at the market and seeing how and where you need to move. And I think the other point that I caught over here was 10,000 sampling, that level of sampling you did. And then you went into data-driven mode and built a portfolio, took it to the new platform. So second point for entrepreneurs on the community, do your massive research. Because when you are familiar with the market at that level of granularity, you're able to drive new things forward and make change. Brilliant. We can move into Candy Crush.
Candy Crush was also actually helped by an external event. Sometimes it's, the biggest companies are also created in a sense because they were lucky that an external event coincided when they were going to market with their flagship product. So what happened in early in 2012, Facebook went public in the US, and it was actually not a very successful IPO.
Okay.
I think the Facebook stock price went down to almost half for the intro price because all the investors were saying Facebook missed the mobile train. It left. It's a web platform. They don't even have a Facebook mobile client. It was all mobile web at that point. They didn't have an app at that point.
And it was very clumsy at that time. I remember as a user.
Yeah.
So, yeah.
It was not a great experience. And I think Facebook really took those concerns to heart, or they already probably were working on a plan, but hadn't gone out with it. So in the second half of 2012, they had already onboarded most users to their Facebook native app. And then they were starting to experimenting with mobile ads. So the first version of Facebook Mobile didn't have any ads at all. So when they did this, they invited some of their most trusted partners from the web business. And there was us, and it was Supercell, and it was Zynga, and maybe one other company. So we were the early access. This is not a well-known story, but I think it's 10 years ago now. So it's so what happened during those first few months is that we King were one of the few companies on a platform with 1 billion MAU, and we were able to acquire new users for Candy Crush for very, very small amounts. I mean, today, if you're talking $5 for an install, we were talking 5 cents at that point.
Okay.
So that combined with a great product, we had working on arriving at the Candy Crush recipe after several years of learnings from these other games. It really was the stars were aligning. We released it, and then there was one more thing. So we had been sort of promised by Apple that we were going to get a feature, in exchange for being exclusive on Candy Crush for iOS for a few weeks. But then we ended up not getting it for whatever reason. It's a black box. You sometimes don't know why something happens within the editorial team. They decide. So instead of going exclusive with Apple, we decided to launch then on both Android, Google Play, and iOS the same week. And this was kind of unusual in 2012. At that point, people were launching first on Apple and then later on Google Play. But by doing both at the same time, we actually saw a much, much more viral loop. Much exponential growth because people could invite cross-platform. And this was sort of in the Facebook spammy days, if you call it. When you had Farmville, you had Candy Crush. If you had a Facebook mobile client, you could be getting Candy Crush requests every hour. Come in and play, give me lives, help me out. So, and again, another external event that was outside of our control, but actually in the end ended up helping this launch. So Candy Crush went on to make, from nothing to making $5 million per day in a matter of 2 months.
Very interesting point. Again, a couple of learning points very quickly for the startup community, and that's where there could be external events which could help you run towards your objective. And I think what really happened was, in your case, that you were able to secure a clean runway with Facebook in the initial time, which eventually gave you the growth and that key decision of going on multiple platforms. I think that was quite crucial as well. In recent times, we have seen, for example, Clubhouse just launching on iPhone, and it has been a lot of discussion on LinkedIn as well. People are putting up polls. Is it a good thing or a bad thing? Because half the population is cut out from the platform. So I think user has to be kept in mind in taking such decisions. And coming to users, for example, what do you think would be the reason for something like Candy Crush to grow to 2 billion level? Is it like it connected well with the user? Was it a core user group that identified very well? Did you guys do any research on that?
Yeah, so I mean, it was a combination of a lot of learnings from the other games that came made over many years. And when we soft launched and tried the game a few weeks before the launch, and we saw the first engagement data, the first retention data come in, we first thought that there must be a bug in it. There's no way that the numbers can be this good. Because sometimes, I mean, normally you have to, when you work with something this hard, you have to believe it's going to be a success. But I think it's sometimes very hard to decide, is it going to be a global success, or is it going to be like one of the other games we already have? So I think we were not certain. You can never be certain that it's going to be a global success. But when we saw the soft launch numbers and we reconfirmed that this is not actually, it's not a bug, the tracking is correct, then we knew that this game was going to be scaling because people started playing. And if we brought in 100 people, 100 random people, or 1 million people, in, a day, then 70% sometimes came back and played again.
Oh, 70%. Oh, that's great.
I mean, it's just such a mainstream. Everyone likes Candy. It's very easy to play. I think there have been a lot of other successful match 3 games in the past that have made players already used to the match 3 mechanic. Okay. So one of the success factors in games is to not reinvent the whole gameplay. It is to build on a behavior. I think this also applies to a lot of consumer startups. Don't invent something completely new. Try to build on form factors or gameplay that people know from real life or from other games. I think a great example is Angry Birds, right? If people did not know what do you call it in English? It's called slangbella in Swedish. You shoot with a rubber and you shoot a stone. Yeah, a slingshot. Yeah. I mean, if people didn't know what a slingshot, I mean, most people have played with a slingshot at some point, so they intuitively knew how Candy Crush worked, and then they saw that in a game and quickly picked it up. I think if slingshots hadn't existed, then Angry Birds would not have been a success.
Okay.
There sometimes needs to be some familiarity for big consumer successes to be happening.
But that's a very interesting point. And then when we are coaching early stage startups, we always say, more than the pitch, it's the hook that works. Can you have a hook that connects with the audience into a familiar space, something which they can come back with? I think it's the same with consumer experience, that if you have some sort of a context lever. So in this case, you're saying Slingshot was a context lever that hooked in, and brilliant. Let's come to EQT Ventures. Early days, purpose, why behind the EQT Ventures? If you can go into that.
Sure. Yeah. So it was Hjalmar Winblad. He was the instigator.
Okay.
He was the, if you know him, he's a serial founder, a fantastic guy. He's been part of starting companies like Sendit, which he sold to Microsoft, Revtel, which and Sinch. Sinch, the one that, not the public one now, another Sinch, but where I joined the board. So Hjalmar founded Revtel, and then in 2014 he asked me to join the board of the company. So that's how we met. And then he also helped start Epidemic Sound, and he's a fantastic serial entrepreneur. And he had been dreaming about starting a venture capital fund or team that would be the one that he had himself wanted to have when he was an entrepreneur. So that was the vision that he came to me with. And then it was me, Hjalmar, and then a man called Kees Kolen in the Netherlands. He was the chairman and the CEO of Booking.com. We were the three partners, and together with Ted Persson, who I think maybe a lot of you know here in Stockholm, and Henrik Landgren was there pretty early as well.
Okay.
And then we teamed up with EQT. So EQT, obviously being one of the most successful private equity firms in the world. I think what we saw in EQT, and Thomas von Koch, who was the managing partner at that point, was that they were extremely complementary to us. EQT was fantastic at running funds, finance, tax, capital raising, all the building blocks. So we talked about EQT like our fourth co-founder, in a sense, but also like a service provider, like Amazon Cloud. We don't have to do everything ourselves. EQT does a lot of these things best in the world, so that we could focus on investing and helping in the companies that we invest in.
Okay.
So that was the reason why we teamed up with EQT, and to obviously also to get the help of the whole EQT platform and the Wallenberg history and those connections also was some part of it.
So teaming up with EQT has been good because that takes care of most of the operational dynamics. Coming to startups or stage, is there any focus when you go in? Like, what kind of ventures do you pick up? Has the trend changed over the years when you started versus now in terms of verticals, if we can go there?
Sure. So we've always been a multi-stage investor. That means that we're quite wide in the sector, the stages and we invest. We can go from seed up to Series B or C. Typically, we invest between 2 million euros and up to 50 million euros per company. So a very wide range. Sector-wise, we're a generalist fund. So I think there used to be two types of VC funds. Now there are actually three, but I can start with the two. So there are generalist funds like ours that are, we believe in a bottom-up approach. We want to meet founders. We want to hear their visions, their stories. And then we decide which ones we buy into, and we share the passion of the founders.
Okay.
So we don't have a clear, opinion. We're not sitting in an ivory tower with our own thesis that this is going to happen.
Okay.
And then you have the second type, which is also very successful. I think all three of these can be successful as VCs. I'm not bashing any type of setup. But some VCs are very thesis-driven. They're typically a bit smaller in fund size. So some are focusing on fintech, some only on consumers, some on B2B. And then they have more clearly, 5 to 10 thesis in their fund. They believe in X and they believe in Y. And then they go and try to find companies that match exactly that. That also works great. It's not us. We're a generalist bottom-up VC that want to team up with your dreams, listen to your dreams, and then buy into that. Now, recently, there's been a third VC coming in. I think we talk about this a lot in our team. So you have the Tiger Global and the Co2 coming in. If you call them VC, they're crossover growth VC. And I think they are much more hands-off and not so into every, the details of the team or the vision. I think the way it seems from the market is that we're going to invest in every company or a lot of the companies to get to a certain stage. And we're going to do it and be hands off. We don't take a board seat. We just want to send them the check and give us a call when you've exited the company. And that also seems to work. It's not for us. We're an active investor. We want to be partnering up with founders. But I think it makes a lot of sense for Tiger Global and Co2 comes from more maybe the hedge fund background. And I've heard that they have fantastic returns as well. So it also works, but it's not for us. I think you have three very distinct type of investors in the market right now.
And would the third type be operating more at the later stages?
Yeah. I heard Tiger Global does a deal every 2 days right now. But, they do 180 deals per year.
Okay.
And it seems like most of them are a bit bigger. And some of them are on the earlier stage. But I think common for all of them is that they don't take any board seat, no nothing. They just write the check and then.
So that's very good. So founder driven, thesis driven, and hands off driven. Okay, that's good. I'm just trying to write very simple notes for our community. But if we go, two questions there, because you started with a discussion on generalists who are more focused on bottom up and founder driven companies and kind of dive in and see the passion. Do you think the investment criteria on both sides are different between the thesis driven versus founder driven? Like founders driven would be more focused on the team structure, or would it be any difference in decision making between these two?
I'm speculating here. We've never been a thesis driven firm like that, so I'm just speculating from the outside. But I'm guessing that they look at much fewer companies that match their thesis, whereas we meet more than 1,000 every year, and we have our own product tool called Motherbrain, where we assess, we review more than 10,000 companies per year.
Okay.
So we're very much, we want to be in the flow of what are entrepreneurs going after now, which problems are they solving, what are they going to do in the next 5 years, rather than saying we know what's going to happen in the next 5 years. We're going to find founders who match our thesis. Both can be successful. So just
that's good. That's good. We have that. So 2 questions coming out from there. First is, where would you place impact? Do you think that's a new VC structure that's coming in, or is it something which cuts across all 3 structures? Like we see, for example, we see that Norgen has grown in 4 years and they've raised around 1.2 billion SEK in fund. Like, is that a fourth type of VC, or is that a sector? How would you see it?
I think Norgen is incredibly impressive so far. What Nicholas has built up there. I think they are, the first mover within that. Obviously, but to me, it's more like a thesis driven then. They would fit into the thesis. They have a thesis that we want to back founders who make the world a better place, which is very admirable, I think. But I think what's happening now is that the other types of firms also make investments in impact. So I think even though Norgen was very early in creating that market and encouraging the ecosystem and enabling entrepreneurs to go after their impact dreams, now what's happening is that all the other VCs are also investing in this space. So like if you look at EQT Ventures, we have Einride, for example, I think a great example. Passionate founders trying to electrify transportation of goods. I think that's a perfect example. It's sustainability, impact, and a great business model and financial investment. We think. We also recently backed TreeCard. TreeCard is a neo challenger bank that has teamed up with Ecosia. Ecosia is one of the sustainable brands based in Germany. What they do is that they give 80% of the profits, TreeCard, from the interchange. So when you have a credit card or debit card, you collect some interchange fees when your consumers spend money. And instead of putting that money to marketing, TreeCard is putting that money to Ecosia and teaming up with them to plant trees. So if you buy a sweatshirt online, then a TreeCard will go and plant 2 trees at the same time based on that transaction. That's also impact. So rather than maximizing profits, we think that this company can be both impactful, making the world a better place, and also be very attractive for millions of consumers. I mean, if you care about carbon emissions, if you're passionate about that, then I think it would be natural for you to choose TreeCard as your debit card when that's going to be launched in your country. That's another example of impact investing, I think, where the lines are not so clear. It's not impact over here and then generalist here and thesis here. I think impact will be, as you said, more horizontal, a part of all the different types of investment. And I think that's great news for everyone. Also Norgen. I think it's great news because they're they're probably seeing right now, I think, the number of upstream investors for their companies exploding.
Okay.
Like they're in Einride together with us. And they have a bunch of really interesting companies in their portfolio. And I'm guessing maybe 3-4 years ago when they got started, it was a bit tougher for them to find upstream investors compared to now.
So we are saying that impact is not a particular vertical, it's not a particular thesis, it's more like something which is emerging at the mainstream level and affecting different investment vehicles or investment bodies wherever it's working. And you said that you sample in around 10,000 startups, like if we call that deal flow. And have your measures internally also started looking at the impact side when you are assessing startups, or is it still very early? Because impact is struggling a lot with the measurement side, and especially when we are coaching with startups, everybody says we'll do this, but then the measurement tools are very rudimentary right now. So how does one as a VC really believe if this is a good or a bad impact investment?
Yeah, no, that's a great question. I mean, most of the companies that we go into, they don't have any, negative impact on the world. So they're not, mature. Most of them mature. There's some exceptions, maybe like, I guess, Einride, but that's clearly an impact company. But most of them are software companies with 20 to 100 employees. So it's not a massive impact on the world in that sense. But what we do, I think to start with, we don't invest in any bad companies, right? We stay out of any bad neighborhoods, right? If there's any doubt of the intention of the founders or a company, then that investment is not for us. And then we think it's a massive plus if the company has a positive impact as a part of the mission. If not the core mission, it has as a part of the mission. EQT has also revised its own mission lately. The whole platform is to build sustainable, lasting companies and make a positive impact on the world.
Okay.
So that's our own revised mission statement. And that's something then that trickles down in everything we do. And most of the people, everyone in our team is very passionate about finding companies that can be great for the world. I mean,
Brilliant. So 2 things. How does the portfolio look for EQT Ventures right now? What's the size of portfolio, if that's something you can answer?
Sure. In EQT Ventures, the first fund, we made 50 investments or 50 portfolio companies, and then there end up being maybe 100 investments. 50 portfolio companies. And in Fund 2, we are at 35-ish right now.
Okay.
And we're probably going to end up around 45 or 50 as well.
Okay.
Now, some of the Ventures 1 companies have already been sold or are no longer around. So I think right now we have around 70-ish companies that we work with. And that number keeps growing because right now I think we invest in maybe 2 new companies per month. It's a pretty high pace. We add, 15, 20 companies per year probably at the current rate. So we haven't tapped out. We're going to be at 100, 110 companies in a couple of years.
But then you go multiple times, like you tag on with the companies that you invest in. So on average, 2 times or 3 times.
Yeah, exactly. So, I mean, 2 examples. So Small Giant Games, for example, which is one of the companies that I worked very closely with. We did the Series A right before they did the global launch of their hit game Empires and Puzzles. So they did a €5 million Series A in March 2017. And then we did a Series B internal round. We did €30 million and 9 months later. So that was us again leading. So we ended up owning about 33%, which maybe not the most common setup in VC. But when we find founders that exceed and they really deliver what they promise, then we're happy to provide more and more capital if the founders want that. Another example is Peakon, where we also led a Series A, and then we kept investing in Series B and Series C before it was sold to Workday here a few months ago for $700 million. Small Giant Games was also sold for $700 million. So by coincidence, 2 of our exits so far have been $700 million valuations.
Where is it that you most likely jump in? Is it Series A or seed or pre-seed stage? Where do you?
Series A is the core focus.
Okay.
We want to be an early stage investor. Sometimes we do late seed and seed, but ideally we would do Series A. That's our
Series A. Okay. And for our community, how would you define? Let's try to put some numbers. What would Series A be in terms of size, as opposed to seed? Because that varies between Europe versus Sweden. So just to get that.
Yeah, and I think round sizes have been growing a lot here in the last 12 months, which is great for everyone, I think. For us, Series A is maybe 4 million euros to 12 million, maybe a bit more sometimes, depending on the sector and the traction.
Okay. And by that token, what would you rate is the typical round size of seed funding in Sweden, for example? If you could just...
Yeah, I would say seed is maybe between 500,000 and 3 million, 4 million-ish.
Okay.
3 million. Very few go over 3 million in seed, I think.
Okay. And where is the focus right now in terms of, like, are you investing in companies outside Sweden, in Nordics and other areas? Like, do you go for a particular geography? Is your focus in Stockholm or rest of Sweden? Like, how is that decision made?
We're also one of the few funds, probably the only fund, who has 5 offices across Europe. So we're very much a pan-European team. Now, I happen to be in Stockholm, and we're here in the Stockholm community, but our Stockholm team is by no means the majority of our firm. So we have Stockholm, and that Stockholm then works with most of the Nordic, some Baltic state companies. And then we have a team in Berlin, and we have a team in Paris, London, and Amsterdam. And we think that 5 hub model makes us closer to the ecosystems. We think these 5 hubs are the major ones. There are other cities that are great as well, but we think by being present in these 5 hubs and having investment teams on the ground in each one of them makes us a great partner, both locally for those investors, but also if we invest in a Swedish company, then we also have connections in these other 4 European cities that can help you when you expand to those markets.
And how often does that happen, that a startup from Stockholm, like maybe or another location in your offices, actually expands to another market and you can help them with all 5 offices?
Very, very often, I think, especially in B2B, where if you come from one of these hubs, your home market will not be big enough for that to be a fantastic outcome. I think in consumer, it depends a bit on, if you're a mobile gaming company, you don't need to have multiple offices in multiple countries. I mean, you distribute your games through the App Store, and there's not so much complexity. It's an infinitely scalable platform. But we have other consumer companies. Let's say we have Instabox and Anyfin in Stockholm, and both of those companies are expanding internationally. Anyfin launched in Germany here recently, for example, and then we had a very active collaboration with them, with our German team, helping out with that. So some, fintech or Instabox, like, home delivery of packages or delivery of packages require a much more local go-to-market strategy than purebred, content apps like gaming or.
And that's where your network of 5 hubs kind of jumps in.
And the broader EQT platform as well. So EQT has 14 offices across Europe. And I think 25 offices across the world. So we're part of this larger entity as well.
How deep you go in working with the startups? Like, how deeply are you involved as a VC with the startups?
So we normally have 1 or 2 people in our team that work the closest with the startups on a board and working with the CEO and maybe some more of the co-founders. And then we have a team of operating partners at EQT Ventures. So this model, we were partly inspired by Andreessen Horowitz when we got started 6 years ago. And we saw that the success of the Andreessen Horowitz model in the US, where you bring in these experts within certain areas that most startups need help with. And then you provide that help to your startups as a part of your investment. So we don't charge anyone for this. We just provide it. If we invested in your company, then anyone on our team is available for you to help out in workshops. And operating partners within our team, we have one doing talent, we have one doing marketing and communications, we have one business development, etc. So these sort of generic parts of building a successful company, we try to then come in and have workshops with founders on what great looks like in the next stage of their journey, which sometimes can be very difficult to know if you're a first-time founder or even if you're a second-time founder. Yeah.
Got it. Let's get on the ground with something which came in the world a year ago and just changed everything. How has COVID affected, altered, or kept your business unchanged? Like, have you seen any effects? Or so you could talk about COVID from your perspective as an organization, plus how you have seen it affecting the startups, because you can reflect on the experience of all the portfolio companies that are working with you. So on two sides, what has been the change?
I think first, the way we work, I think it was quite quickly, we haven't done any business travel in more than a year, which is pretty nice. I have 3 kids and I can see them a lot more when I'm not traveling. It's very productive, I think, to not have to fly anywhere. And I think this sort of external event, although horrible for many other reasons, has forced acceptance of the video call like this, right? And I think that's fantastic for the environment to have less travel, unnecessary travel between countries, but also for us as human beings to not have to fly everywhere all the time because it's expected and it's possible. I think that's been a major change that we hope is going to have a permanent long stay after this. I mean, we're not going to be locked down to our home offices, but we hope that this sort of acceptance for meeting over Zoom or other video calls and making a collaboration and a lasting relationship will work even in a year or several years in the future. That's on the good side.
Okay.
I think talking about external events that we discussed before, I mean, this was, if you remember a year ago, this kind of came from nowhere and there was panic and people were hoarding food and buying toilet paper, all this crazy stuff. I think what we focused on in the most crucial time there was to help our existing portfolio companies to make sure they were capitalized and they were doing the right measures to adapt to the pandemic. So that's kind of where we focused in the second quarter last year, March, April, May.
Okay.
I think in hindsight, we could have maybe been, if something similar again happens, I think it could also have been an opportunity to be even more proactive out. And then again, discuss, what's going to be created here from this. Sometimes it's difficult when you're in crisis mode to also lift yourself up and think, so how did this change? What new is going to come out of it? And I think that's what we've seen in the months since then on the positive side. A lot of the trends that we already were investing in before COVID have only been accelerated by the pandemic. I mean, if you look at digital primary care, we have been Doctor in Stockholm. I mean, it was a good trend before, but obviously this pandemic has accelerated. We have Volt being one of our most successful companies, Helsinki-based food delivery. I'm not that I can't tell you exactly how much they're growing, but I mean, it's been a fantastic journey for home delivery of food in the last year. And these companies were doing well before, and now they're just smashing it.
Okay.
Same with mobile gaming. People are playing more mobile games than ever before. So in general, I think the consumer companies have been, an Instabox we have now, and the consumer companies have been benefiting from this because we were already investing with a trend that got accelerated by the pandemic. Some of the B2B companies have had a tougher time as maybe not all of their clients, the decision makers within larger enterprises, have not all adapted to buying product and services digitally to the same extent. Yeah. It's maybe easier for people like you and I or on this call who are tech natives and progressive and can adapt to start saying, okay, let's do everything over Zoom. But if you've been running your own family company for 40 years and you have your way, I want to meet the person to make a deal, then that's obviously been very difficult to get a hold of that person in the last years. I think overall, some of the B2B sectors have been harder hit by this, but they'll hopefully see then a massive trajectory here as we come out of the vaccinations and going back to normal in some ways.
But true that, I think you're absolutely right. When we are talking traditional VC space or the startup industry, tech is a major component there. So of course, the tech side has, with the digitalization, the consumer side of the tech has really grown. And I think we can see all those results. And you're right, traditional businesses might be struggling, let's say in hospitality industry. That's one example where probably a restaurant doesn't qualify as an investment. It's more like a small business versus a startup. We always think there's a small business and there's a startup. But I think my experience in coaching some of those businesses has been that even with, so the first month of Zoom was very like jittery, the March or late February, but people very quickly adapted. So I think human beings have a natural tendency to adapt very quickly, and that has happened. So I think with the pandemic, I think it has been a lot of digital learning opportunity for everybody. Think about kids running the entire classrooms and doing presentations, or my kids have been home and doing most of it. So it's been great. What do you think are the long-term or the short-term implications going forward on the VC industry? Do you think I was thinking, looking over TechCrunch's recent diagnosis where they see an upswing in funding, but do you think that's a temporary bubble? Do you think funding will remain more or less unaffected going forward? What are the readings from inside the market?
So I think there's never been more VC and growth stage funding in Europe. It's been really exploding the number of new funds, including us, if you call us new, and other funds across Europe. But at the same time, the number of tech companies have also grown, number of startups. So it's both sides are both portions are growing. I think there's been a tendency, maybe a bifurcation is a VC word, but it's like maybe a larger difference between those who have and those who have not. I mean, if you're running a pre-seed or a seed stage company, maybe there are days or weeks where you feel that, where's all this VC money going to? It's certainly not going to me, right? I mean, statistically, most companies don't get funded, right?
Yeah.
So it's maybe a bit tough to sit here and say that, it's never been easier to raise money than it is today, because most companies still don't get funded. There's been a maybe even greater difference, just like a society you mentioned. Tech companies doing really well, but maybe some traditional small businesses are, closing down or firing people. So it's really been the pandemic has also accelerated that, maybe within VC, that some companies can raise hundreds of millions of euros, whereas a lot of entrepreneurs feel that it's no easier to raise money today than it was before the pandemic.
Okay.
So it's very difficult to give you a clear answer. It's great for everyone, but I think what's happened with this, the Zoom VC era, if you call it that, is that it's easier for us and for everyone now to invest anywhere in Europe. Okay. We did it already before. I mean, we have companies. I think in the first 50 companies, they were in 27 different cities across Europe. So we were already doing that, but now I think it's easier for most VCs to say, okay, I can work with you even if you're in Tampere, Finland, or in Malmö, Sweden, because we can work well together over Zoom. So now it's like, if you before had more closed ecosystems in each city, now I think it's more European. You're a European investor, you can invest anywhere in Europe.
That's brilliant. So open ecosystem and more reach to VCs. I'll go into one of the points with Adio Risi was here a few weeks ago. He was speaking on behalf of Founders Institute. And he was relating his story that how Founders Institute started a program called VC Lab, where they are kind of coaching the next generation of entrepreneurs and maybe successful founders who can now go in and start early stage or early or medium stage funds. What's your view on the evolution of the entire VC industry? Do you think early stage is going to become a hot thing in the next 5 years, really, really early stage? Or do you think it's something, it could be temporary and still the VC focus will be middle stage, late seed, or Series A?
I think the early stage is already the hottest. Everyone is going earlier and earlier because there's so much competition then for these, hotter deals. Yeah, it's a good question on the. I think in general, the other trend is maybe that most VCs nowadays, or starting nowadays, come from an entrepreneurial background, like in our team, entrepreneurs and operators. I mean, there are not so many people coming from finance today and managing to pull off. I mean, they're also good at what they do, but I mean, I think if you look 15 years ago, maybe the traditional VC firm was made up of people from Goldman Sachs, Morgan Stanley, JP Morgan, BCG, maybe McKinsey. And now it's much more about people who first did an entrepreneurial journey and then started a VC fund to help the next generation. I think that's something that happened in the US way before Europe and has happened much more so lately in Europe. And I think that's great for the ecosystem because it's probably easier to connect with someone who's been there in the same shoes. Or similar, not the same ones, but same through ups and downs before becoming an investor in the space.
And that's good for startups as well, because they can get all that advice in home from that from the VC. We move into questions, Marina. I'll just make you bring you in, or maybe hold on. So we'll just take some audience question. In the meantime, if you could tell us what's the best way for startups who have raised seed funding or are kind of close to their journey of coming to your fund, what's the best way they can touch base with you? And
hopefully we find you. I think that's our, don't call us, we'll call you. No, I mean, our emails on our website. People can email me right out. I read all my emails. And we try to not be sort of in the old boys network of, you have to be, I had to go to school with Lars to get an investment from EQT Ventures. We really try to stay away from that and be open to getting, cold emails in and looking at and using Motherbrain, as I said before, as a key way for us to find out which companies we want to be talking to.
Got it. Brilliant. Marina, do we have some questions from the audience?
Yes, we do. First of all, hello to both of you.
Hi.
Hi, Lars. Very nice, hearing your discussions. And I will just jump straight into the questions because we don't have much time. So I will bring you up a couple of questions from Eric Björkman. He's asking about the A/B testing at King. Was there a strong discipline of testing new games all the time? Or was it more a chance that Candy Crush became super success?
So we didn't necessarily A/B test Candy Crush before the launch, but it was more a result of all the learnings from our previous products. And some of those learnings were from A/B testing. But I think my experience was that there was never a massive breakthrough from an A/B test. We managed to iterate and optimize customer lifetime values, conversions, and engagement. But the bigger leaps were always made by someone coming up with an idea and saying, we want to try this out. And it was not actually coming from, you need to have a combination of innovation and the data telling you if you were right or not.
Cool. Yeah, that's great to know. Thank you. And Lars, Eric also has another question. His CDO claims that a cross-platform app programmed in Flutter will never get featured by Apple editorial team. Do you have any idea about that?
I have no idea about that.
Perfect.
I think my impression is Apple they love innovative apps, and that they make something delightful for end users, and you will have a good chance of them finding you. I'm guessing they don't care about which programming language you use, but I don't know, to be honest.
I guess that's the answer. Great. Now he can talk to his CEO. Then I have a question from Ebba Lorena, and she's asking a question for her SSES students. The promising startup entrepreneur in my courses and for myself. So when is a good time or timing to start networking with you at EQT Ventures? If you're in a startup entrepreneur program, I guess.
I think it's probably not when you have an idea. A lot of people come with us with ideas, and you say, would you back that? That's probably a bit too early for us. And we, even though we would love to discuss ideas for hours every day, we just simply don't have the time to do that. So we focus mainly on, ideally, you come with your co-founders. We think it's important to have co-founders. As we said earlier, entrepreneurship is an up and down roller coaster. And for us, it's important that you have co-founders that you trust and work well with and share that burden with, because you're going to hit rough patches. If it's a pre-seed, Series A, there'll be a year or years where you will have a tough time. And that's going to be much easier for you to go through if you have co-founders to share the burden with. So I think the stage you approach us is probably when you have co-founders, you have worked on your idea together with the co-founders for a year, maybe a year and a half, maybe sometimes more. You have a product either live or about to go live, and you want to show it to us or discuss it. That's kind of, so not PowerPoint, I'm a single person. It's more like, we're co-founders, maybe a few employees, you raise some angel money, and you think you've solved a big problem for someone. And then you want to see if we want to join that journey. That's the best stage.
Yeah, that's great to know. A couple of follow-up questions on this line. One from Randy Gotza, and he's asking, as you mentioned, revising your mission statement, what do you look for in a mission statement of company invest in?
I think it's something audacious, something, not local, not like if your mission statement is to be, cook the best, hamburger in northern Stockholm, that's great. I mean, that's great. I don't look down on, I think it's fantastic if that's your mission, that your passion. But for us as a VC firm, I think it's important to know that if you want to, it's not for everyone to get VC funding as well. It's not the best for every company. It's not something magical for every company that can get it. I think it's important to know that for venture capitals and startups to team up, it needs to be for a very bold and ambitious outcome. And that's just the nature of the business we're in, because we promised our investors, we're backed by some of your pension funds. There's the circular economy too. Some of the pension funds and family offices and other institutions have backed us on the promise that we will back entrepreneurs that can give us fantastic returns, and in the end help your